Hi everyone, this is Luis.bedoya with eXp Realty. I am a real estate agent in the state of Florida in the Tampa Bay area. Today, I have a special guest for you home buyers or those that are interested in buying a property in the Tampa Bay area. So today's guest is not only a mortgage lender and loan officer, but he's also an investor himself. He owns a few Airbnb properties in the state of Florida in the Pinellas County area. His name is Austyn Shuman, and I brought Austyn to answer the top 5 questions, the top few questions that I get asked the most from many of my clients. I wanted to have this information here available for you. So if you have any questions, if you want to know more information, leave them in the comments below. If you want to contact Austyn or me, our contact info is going to be posted in the description of this video. Leave a like, subscribe to my channel, make sure to hit the notification bell. Austyn and I will be providing you with further information, up-to-date 2022 updates on the process of getting a loan or getting pre-approved, getting approved for a loan in the state of Florida. Okay, so I do want to let you know that unfortunately technology, you can't control it, and soon things didn't go as we planned it and we don't have an actual video footage for this conversation. I decided to go ahead and still upload the audio version of our conversation. That way you can still get to hear a little bit of what Austyn has to say. And I promise you that in the next future video, the next upcoming video with Austyn, we will definitely have a video footage for that. So without further ado, here we go. Austyn, how you doing today?
Hey buddy, thanks for having me on today.
Absolutely, my friend.
I'm Austyn Shuman. I work at Revolution Mortgage. I have my own branch way up here in Hayden, Idaho. But like you're being told now, is I have can't even talk there now. I have a few homes in Florida that I frequent quite often, so I'm always down there. We actually met in Florida, if you remember that.
Yeah.
A local food place. Anyway, great people down there in Florida, just like people up here in Idaho. So I'm glad to be on, and I can't wait to help out.
Absolutely. So we met at one of the local bars. This place was called Locals, actually, and it's a small bar, but they have, in my opinion, some of the best food, some of the best sports. So I love to go there, and that's exactly the place I found you, mate.
It was awesome. We just sat next to each other, started talking, and all of a sudden it was just game over. We're friends.
All right, without further ado, let's get into the meat and bones of this video. We've got 10 questions here. Let's start with number 1. What's the difference? And listen, if you've got anything else that you want to say or add, go ahead. But okay. Question number 1, what's the difference between applying as a self-employed, as a W-2 employee, or as a business owner?
I'm glad you asked. So there's 2 big differences between W-2 and self-employed as far as qualifying. With the self-employed borrowers, we're going to need at least 2 years worth of tax returns in order to do an average on your income. And we do that by combining both years and divide what you made in profit by 24 months. And that's going to give us basically what you qualify for. So with self-employed borrowers, there's these add back categories. Okay. Before we get into the add back categories, I just wanted to let you know, when you're writing things off as a self-employed borrower, you can dig yourself into a big hole by writing off too much, and then you won't qualify for anything to purchase a home. And we have other programs if that is you, so don't worry, we'll get to that question here in a little while. But for just a basic self-employed borrower, we need 2 years tax returns. If you write off a bunch of stuff, you want to write them off in what's called add-back categories. And that's depreciation, depletion, business use of home, and amortization if it's noted on your tax return. We can add all that back in. So for example, if you got $100,000 a year business, you're only profiting $30,000 with the IRS, but you have $50,000 in depreciation, we can add those 2 back together. Now we can show that you made $80,000. Does that make sense?
Yeah, so basically you're capitalizing on the use of appreciation instead of just writing things off left and right.
Exactly. Yeah. And so if you're going to write things off, totally fine. I get it. I do it. I don't like paying taxes, you know, but there's 2 things certain in life, and that's death and taxes. So we're definitely going to have to pay taxes at some point. you don't necessarily have to be at the same job for 2 years. You just have to be in the workforce for 2 years or show something of that nature. So for instance, if you're a VA borrower and you were working on tanks, maybe you did oil changes for tanks and you just got out of the military, you're wondering if you can use your VA loan, and you are working at Toyota and now you do oil changes. We can connect those two. You've been in the military, you've changed oil there. And now you're changing oil with Toyota. You have experience in this. This is just one of hundreds of examples that we can use, thousands of examples to connect the dots. And that's all the underwriter is looking for, is just to connect the dots for that 2-year work history. So you're going to hear it a lot, like, oh, do I have to be at my job for 2 years? The answer is not necessarily. You just got to be in the workforce for 2 years. If you're entering an entry-level job, coming from a totally different field, you have a really good chance still. So don't give up hope being just a W-2 wage earner. There's nothing wrong with that. And there's nothing wrong with you trying to apply for a mortgage even 1 month into your new job.
Right. And it seems that we've had a growth in the amount of small businesses within the last 2 years. You know, the COVID has pushed a lot of people out of their 9-to-5 jobs. They're starting new businesses. And it seems like lenders are trying to come up with, banks are coming up with different options to lend this money out to business owners or self-employed people.
They are. They definitely are trying to do whatever they can to help the average American or average small business owner. The truth is, like you said, we have a lot of self-employed business owners. The last couple of years, it's been beaten and battered, and there's not a lot of options out there for these people. When you're working with a banker, you do have a couple of options typically with them. They might have something called a portfolio loan that you want to look into, and that's where they take all the pieces of your loan together and they say, look, Mr. Shuman, he's been working hard for the last 2 years. He owns a restaurant. COVID hit him. Obviously, we have a depletion in his income for that year. He didn't have any guests coming in. So what can we do with him? Here's the last 3 years of his tax returns. Wow, he did great in 2019, great in 2020. And then all of a sudden with COVID, it really just dropped his income off. What can we do? Some of those bankers, they'll do what's called a portfolio loan. They look at that. They look at your credit score. They look at cash reserves. They look at what you're currently getting in for business, and they're going to make a decision on that. Now, if you're working with a banker broker like myself, we have a lot of options out there. So we have your standard bank options, which is like FHA, conventional, USDA, VA, but we also have the broker channels, which is great. So there's banks out there. For instance, today I was just looking at one. It's called AFR Wholesale or AFR Lending. And they provide a bank statement loan. So you can do 24-month business bank statements or 12-month personal bank statements. We take an average of that as your income. So if you're one that writes off a bunch of stuff, or if you show a loss on your tax returns and everybody else is saying no, this might be your option. As long as we can show that you've had 24 months of deposits and we take an average of that for your business, then we can show some sort of income there and use that to qualify you.
Right. And the whole point here is that if anybody who's watching this video has any questions in terms of what does VA mean, what does FHA, what's conventional, what do you mean by brokers and banks, feel free to leave a comment in the section below. Feel free to contact Austyn or myself directly. We will have all our contact information on this page. So let's move on with this question number 2, which I have written down here. It says, how much will I need for a down payment? And this is obviously, going to depend on the type of program you're going with, the type of the property price that you're going with. But what can we think of in terms in average?
Okay, so the average down payment is probably going to be 3 to 4% down. Okay, so you're looking at VA, for instance. There's a zero down program, USDA as well. So VA is for veterans. USDA is an agricultural loan. It's more of a loan that we have used up here in Idaho. I don't know so many of those loans being used in Florida currently. Not a whole lot of agriculture in the Tampa region, but maybe outside of that, there definitely could be. There is a map on the USDA's website that we can actually check that for you and see if that particular property falls within those lines. And that's a zero down program as well. With conventional, if you're a first-time home buyer, you typically can get away with 3% down. The average, though, the typical down payment for conventional usually starts at 5%. Most people are putting between 3 and 5% down on conventional. If you're looking at doing FHA, which is probably one of the most popular and most powerful programs out there, you can do 3.5% down. Your parents can give you a gift for most or all that down payment. You can purchase a single family home, a duplex, a triplex, or even a quadplex with just 3.5% down. So now you can make instant equity and leverage your debt to help rent pay for your mortgage. And we can actually qualify you based on those projected rents with what an appraiser will give us. It's called a rental schedule. And so if you're looking at like a duplex or a quadplex, for instance, we'll send the appraiser out there and they're going to write up a rental schedule, let us know what those units could rent for, and we're going to use that to offset your debt to income ratio. So if you've had a previous no on a single family home before, don't give up. Let's look at some multifamily stuff. We can offset your mortgage payment with somebody else's rent. And you know what rents are right now? They're super high. So they keep going up too. It's crazy.
Absolutely. That's one of the popular ways of saving or getting ahead of life. Right now, a lot of YouTube channels, TikTok channels are talking about house hacking. Make sure you buy a duplex, triplex. So what Austyn is explaining is that the bank will qualify you based on the potential income that you will receive if you were to rent out those extra units. In the Pinellas County or the Tampa Bay area, it is a little bit difficult to find duplexes, triplexes, quadruplexes, but there are some available. They can be found, and you can apply to one of these programs with Austyn as well. But I will say it's a great opportunity for someone who's considering putting down a small amount of money and getting into a nice a channel for equity, for growth. So this is not going to make you cash rich, but it's definitely going to help you save money. And whenever you're ready to sell or just move out of that property, you should definitely be able to get most of your investment back. According to the statistics in our county, it will probably take you about 3 to 4 years to get your whole investment out.
That's awesome. I mean, the equity that is made on homes there in Florida is just not matched by many states out there, or even counties. In that Pinellas County, if you've been waiting to buy a home, wait no longer. Get in the market now. I'm getting into the market down there. Everybody should be getting into that market because that market's going to make some people some money.
It already has.
Yeah,
I rent where I live. And this homeowner, she purchased this property in 2018 at around 180K. I recently ran a home valuation, and if we were to repair and redo all the things that need to be redone, this property will be sold probably around 380 to 400K. So she's sitting in around 250K of equity, and I know a lot of friends and family relatives that they're sitting in that same boat. It's, in fact, they don't even realize that some of them already millionaires on equity, haven't really dawned to them. So I'm going to ask you about what should I be doing if I'm in that position, type of cash out loans and strategies that I can use to continue reinvesting from that equity. Question number 3, how does the application process work with you, Austyn? How would it look for a new client to reach out to you and start a new process?
It's very easy. It usually starts with a text or a phone call. So a lot of people have been moved to that text piece. We're all busy. We're running around. Maybe we're working from home. We got our kids in the background. I get it. I got a 4-month-old and a 6-year-old. So calling or texting gets the conversation started just so I can see where we're going to go with this and who to send the application to. So there's 3 different ways really I can take an application. One, directly over the phone. I can just take your information over the phone, get the application going and work on it right away. The other option is I can take it with my application. So my app that I can send you to your smartphone. You can do it right on your smartphone. It takes about 15, 20 minutes. And what's nice about the app is that it stays on your phone. You can actually upload documents to it if you need to, and it keeps you updated on where you are in the loan process. So are you in processing, underwriting? Where is my loan at? So, and it also has a calculator on there. So you can calculate what your monthly payment's going to be. Let's say you're fighting doing 20% down or 30% down or 50 or 10%, whatever it is. you can plug that into the calculator and see what your actual payment's going to be. And then you'll just consult with me and I can change all that during the process as long as you qualify for it. And so it's a really easy step. The third way is we can actually send it to your computer and you can fill it out online, just like a normal online application for anything, a vehicle, whatever.
I really like the app. Honestly, if anybody's considering filling out the application and finding out what they qualify for, I strongly suggest that they just download the app. What's the name of the app again?
It's through Simple Nexus, but it's just called the Revolution Mortgage app. And we'll put a link in this video. How's that? And then people can access it.
Absolutely. Let's go ahead and do that. Okay. So now that we know how the application process work with you, let's talk about what should I not do during the loan process.
The do nots of the loan industry. There's a few of them. Definitely do not change jobs while we're looking at real estate. You got a pre-approval letter out there. The worst phone call in the world is somebody is changing jobs and now we got to do a recertification of their income. You know, maybe we were using overtime before and now with this new job, we don't know what their overtime is going to look like. So if we lose their overtime, you don't qualify now. You might make the same hourly rate, but if you change jobs, it definitely can cause issues for you during that process. So don't do that. Don't take out any new debt. Don't run your credit. So don't be a co-signer. Don't go buy all your furniture before you get into the house. Don't go buy that new truck before we close on the loan. All these things can be the big speed bump that costs you lots of money right now. Earnest money goes hard now after 7 days, typically, with these inspections, you know, and it's just not the market it was 5 years ago. So don't make the mistake. If you're going to be moving money, big chunks of money or anything like that, before you do that, because there are instances where we want you to move money from one account to another. Before you do that, just consult with me, quick text message. Hey, I'd like to do this. Let me look at your assets real quick and make sure that works. And how are we going to do it? You know, you might be moving, I've taken a gift funds from your parents, but what you didn't know is if the parents sent the funds straight to the title company instead of to you, we don't have to go back to the bank and get your bank statements or a transaction history signed and dated by the teller behind the counter by just knowing that information. So those are the big do nots. And do not answer your phone when I call you. That's my biggest one.
That's very important. Make sure to keep a good channel of communication with your agent and your lender. It's extremely important. I did hear of a client from my my previous team. It was about a week before closing. He went and bought a brand new jet ski. He financed the thing and he took it out to, I think it was the Bahamas. I think it's a 4-hour trip from Florida all the way down to the Bahamas on a jet ski.
And didn't answer his phone or nothing?
For a whole weekend, he was just gone.
Jeez. That's crazy. That's really crazy.
Don't do that.
Buy tractors, you know, and they're like, I need the tractor for that new house. Well, you can't do that. You don't have a new house now. Then we got a cosign. So it's a difficult thing. So stay away from the do nots. We might be able to make a whole video on do nots.
Yeah, absolutely. So again, this video, the purpose of Austyn and I getting here together is to provide you with the specific information that you're going to need if you're considering, wondering, or inquiring of what this process of lending and borrowing money from a lender to buy either your first property, your investment property. Another great thing with Austyn is that he's an investor himself. He's got some of his own skin on this game. Right. So I think you own about 3 or 4 Airbnbs.
Yeah. So I'm just closing on number 4 on the 16th. So it's going good, guys. Airbnb, there's just nothing like the short-term rental market if you're looking to invest. And kind of going back to what you were saying is, your parents or landlord or friends or family that you know, they might be sitting on $100,000, $200,000, $500,000 in equity, and they don't even know it. And $125,000 on an investment property could change your life. It really could. Just ask me. I'll show you all the financial reporting that you need. I'm very open with that. I'll show you exactly how that Airbnb stuff runs. If you work with us, we're going to get it done. We're the dream team.
Absolutely. And you're doing the Airbnb thing. I'm also very much into the term seasonal rentals that you find on the beaches, because there's some areas of the beaches that they will not allow you to do
Not at
rentals
all.
shorter than
Yeah.
3 months, right? In the entire city, you cannot have an Airbnb. So for those, we have 3 month rentals. Usually those are paid up in cash. Those are paid up in advance. I've seen them between $3,000 to $5,000 a month. And when any of my clients ask me, help me find one of these, we need at least 6 to 8 months so we can actually find something. It's an absolutely cash flow, cash cow. It's good appreciation. Last year they had an increase of 27%. The year previous that, I think it was 22% in the in the St. Petersburg Beach area. So some of these condos have gone up in price 60, 70, 80% in the last 24 months.
It is crazy, and there's nothing like it. And if you miss this opportunity, you might miss it forever, unfortunately.
Okay, so let's move on to our next question. Maybe it'll have to be the last one. We don't want to extend this video way too much, but and this one is going to be important for investors. How do cash out loans work? How can I start investing using my equity?
Really easy. First, you got to ask yourself, why am I doing this cash out refinance? There's 3 major reasons why. One, you're paying off a lot of high interest debt. Right now, the rates are higher than what you probably have on your current house. You might be floating a 2.75% interest rate, and you're going to be looking at 5.5 up to 6% sometimes doing a cash out. So you got to determine, is it worth it for me? So if you're paying off high interest credit cards or debts that are just costing you, a couple $1,000s a month to get your cash flow in line, this is a great option. You can pull out $100,000, pay off all that debt or student loans that you've had, or debt that you had to take out during the coronavirus, and now you're back to work and you just want to hit the restart button. A cash out refinance is great. It's a great option. Rates are not getting any cheaper, so they're going to continue to rise. So the longer that you wait on there, the more you'll end up paying in interest. And eventually, hopefully, we'll see a correction to those rates, and maybe you'll be refinancing again just to lower that payment. The second reason is investing. You want to pull that money out and turn it into a cash cow, right? Just like what you were saying. Mm-hmm. So if you could pull $100,000, $200,000, $300,000 out, there's no reason why you can't buy enough Airbnbs or properties to retire at that point. So you might be sitting on your retirement at the age of 35 and you don't even know it. It's crazy out there. The third reason basically is to upgrade the home. You want a new kitchen, or you want to add that garage on that second lot that you've never been able to do, or totally remodel that pool, that's been giving you problems, it's all cracked to pieces and everything. You want to improve the value of your home. Why don't you take some money out, put it into the home, and then improve the value even more? Add that bedroom that you've always wanted to add, or do those things that you want to do. If moving is not an option right now, if you're like me and you're thinking, hey, if I sell, where am I going to go? And you don't know, a cash out refinance might be the answer for you.
Those are absolutely great options for anybody that it's a homeowner. And as I just mentioned, I've known several homeowners that at one point in their lives, they decided to buy a home. They put out $20,000 from the rocks, $30,000 somewhat. They got themselves in a mortgage, and then 3, 4, 5 years later, they're sitting on thousands of dollars of equity, and there's not that they don't have that financial literacy to be aware that they can take that opportunity and build a completely different life, financially speaking, from that point of original of the first investment. So what we call this is leveraging, using your leverage. And I think the issue is some people might over leverage. They might borrow too much. They may borrow at really high interests, and they might put this money into investments that might not make that much financial sense. So that's what you have to be careful with. Make sure you're not over leveraging, putting yourself at a huge debt that you won't be able to manage. However, if you're working with Austyn, if you're working with Luis, you're going to have financial breakdowns done over any of the properties that you're considering. If you like this $500,000 home by the water, we're going to put it on an Excel sheet. We're going to break it down year by year. That way we know how much the property taxes are going to be, all the repairs, all the maintenance, how much do we have to have in reserbs? Is that property going to finish that year at a positive or a negative cash flow? And does it even make sense? There's so many properties that you might end the year $2,000 negative, but within a year or two, you've already accumulated half the equity of the original value. Exactly. So that means you're not making a lot of cash in the first 24 months, but when you're ready to sell your investment, you got thousands of dollars sitting there waiting for you.
Exactly. So even if sometimes it makes that payment, this is more the long-term game, but even if it's making that payment and you're just doing long-term rental and holding on to that property, you can walk into a couple $100,000 of equity in the next couple of years fairly easily. One more note, I know that we're getting kind of down there in time, but I just wanted to say the rates are going up, guys. I'm hearing it more. I'm seeing it more. We're going to have some more rate hikes. What's that going to do for pricing? It might level out some pricing, but the problem is by the year 2100, so I know it seems far out, but it's really not. It's really not that far off. We need to build 2 billion homes in the worldwide with a B, 2 billion homes. Okay, to meet demand that's increasing with population and with what investors are trying to scoop up. In order to do that, it's going to be tight, man. It's going to be tight trying to get into a home now. It's going to be tight to try to get in a home in 10 years. It's going to be super tight to get in a home in 70 years from now. So I know no one's thinking out there 70, 80 years, but it's going to come to a point where there's just no inventory and so many people trying to buy. And what is that going to do to prices? So you might actually be in the right time right now to pull the trigger on something that somebody else is not. When the rates were low, everybody was trying to buy. Right now, people see the rates kind of come up and they're looking a little bit. They might be a little bit jumpy. That's your opportunity. Jump in, make an offer, get under contract, and let's start making money on that house.
Thank you so much, Austyn, for all the information you're giving us today. This is absolutely important, special. I hope the listeners really got everything for us, as much as they wanted out of this video. Please stay tuned because Austyn and I are going to continue meeting and developing more into these topics. If you have any more questions about lending or lending options, make sure you contact Austyn. She's going to leave all the information on the link below. You can email him, you can text them, you can call him. We're both very proactive people, so you can call us. It could be a Saturday. Doesn't matter, just ring our phones. We'll be happy to connect with you and help you in any way we can, whether you end up buying or not with us, whether you end up making business or not with us. We like to make friends. We like to connect, just like we did that time in the bar a year and a half ago. So stay tuned to this channel. Make sure you like and subscribe if you like this content, and I'll see you in the next one.
Thank you so much for having me on. I can't wait to see you guys and dive into these topics more.
Awesome. I hope you liked today's video. Austyn and I will continue to meet periodically to bring you the most up-to-date information in terms of buying properties and investing in the Tampa Bay area, the Pinellas County, the Hillsborough County, etc. If you have any further questions, feel free to leave them in the comments below. If you want to contact Austyn directly or myself, our contact information is posted in the description of this video. Make sure to leave a like, subscribe, hit the notification bell so you don't miss on future content. Austyn, thank you so much for your time and answering all these questions. I look forward to having you in the next video. And thank you also for taking excellent care of every single client, friend, and referral that I've sent over your way. Certainly do appreciate that. Again, everyone else out there, have a fantastic day, a blessed weekend, and I look forward to seeing you in the next video. Bye-bye.